Euro dollar. So despite recent gains in the euro, the market remains locked within a well-defined downtrend, and any rallies are classified as corrective at this point, with an eventual drop seen back below recent lows at 108.09, and then towards that 2015 multi-year low at 104.62 further down. At this point, only a break back above recent highs that we saw at 111.30 would take the immediate pressure off the downside. Sterling dollar. So cable actually remains quite constructive since basing out several months back, and the market looks like it could be putting in a higher low at 153.50 ahead of the next major upside extension back towards and eventually above the 2015 peak at 159.30. At this point, a break back below 153.50 would be required to compromise the current constructive outlook and put the pressure back on the downside. Dollar yen. So dollar yen continues its surge, with the market recovering out from that recent 121.30 low that we saw back on the 8th of July, with gains extending thus far up just over 125. However, the market does look like it's finding some resistance into the 125 area, and with monthly studies overbought, we could soon see the market stall out in favor of additional consolidation and correction before any meaningful bullish resumption. At this point, however, a break back below that recent low that we saw going back to the 27th of July at 123 would be required to take the immediate pressure off the top side. Euro Swiss. So Euro Swiss has surged in recent trade, with the market clearing ever since the market cleared key previous resistance at 105.75, and latest rally has now taken out critical resistance in the form of that February peak at 108.15. At this point, the latest rally does open the door for the next upside extension towards psychological barriers at 110, though with daily studies super overbought at this point, there is risk for a bit of a corrective pullback before we see any meaningful recovery back towards 110. Ultimately, however, any setback should be very well supported into that previous resistance, now turned support at 105.75. Aussie dollar. So Aussie has been attempting to correct since putting in a double bottom formation the other week, and the market could still be poised for upside towards the 75 handle over the coming sessions. Look for any setbacks to be well supported on a close basis above 73, though a daily close below 73 would open the door for a resumption of declines and fresh downside extension back below that recent low that we saw at 72.35 going back to the 31st of July. A break below 72.35 would expose the psychological barrier at 70 further down. Dollar CAD. So dollar CAD is finally seeing a bit of a correction off fresh multi-year highs, fresh 11 highs that we saw just over 132 a few days back. Deeper setbacks could still be in the cards down towards recent lows that we saw going back to the 29th of July at 128.61, with a break to open a more intensified correction down towards the 126 area. Still, the market is locked within a well-defined uptrend, and any setbacks are viewed as corrective in favor of a higher low and bullish resumption, eventually back above that recent high that we saw at 132.14. Kiwi dollar. So Kiwi could be putting in a short-term base now, with the market having a hard time establishing below 65 after recently putting in a fresh multi-year low at 64.90 about. At this point, there is risk for additional corrective upside towards the 68 area, though a lower top is ultimately sought out in favor of an eventual bearish resumption below 64.90 and down towards next key psychological barriers for this pair at 60. SPX 500. So the S&P 500 continues to chop around, though there are signs of the market wanting to put in a major top since putting in a record high back in May at 2137. At this point, however, we need to see a break below the March low at 2040 to confirm and accelerate declines. Gold. So gold is finally showing signs of potentially basing out after posting fresh multi-year lows the other week around the 1070 area. At this point, however, a break back above previous support in the form of that previous 2015 base at 1142 would be required to take the immediate pressure off the downside. Until then, any rallies are classified as corrective, with a lower top sought out ahead of a bearish resumption below that 1070 area and down towards critical psychological barriers at 1000.